Joining us now to discuss his BCI Equity Fund is Peter Armitage. He is the CEO of Anchor Capital. Peter, thank you for making the time to join us. Looking at your fund sheet, there's a very big blue plaster on the fund sheet that says this is South Africa's #1 general equity fund. What makes you #1?
We beat everybody else. No, I think it's you get there's a measurement over the previous 12 months.
Yeah.
And over the last 12 months, we've come top of the pile. In that equity fund category, there's about 200 participants. I think about 180. So it's we're quite proud of being there. You don't stay there for long. So when you're there, you've got to beat your chest a bit. And you'll find that guys market their funds like that. So I think we're quite chuffed with how we've done. The moment you get arrogant about it, you'll find yourself at a number 180. But I think we've called the market right over the last 12. There's always a certain amount of randomness
congratulations. Sorry, can I jump in here? Because I'm desperate to get this question in now. Congratulations, first of all. Yeah, and you do look chuffed, but don't get too cocky about it. Top 10 holdings, Naspers, Steinhoff, Mediclinic, Alexander Forbes. What's the other one? Discovery. It goes on, but the top 10 doesn't include a share which is intimately linked to the bloke sitting to your left. Why no Vodacom? Please tell him.
That's putting me on the spot. No, I think, I mean, the cell phone companies, I think, are great businesses over time, and they're extremely liquid. So you can be in them, you can take big positions. We can have 10% of our fund in or out of them in a day. So that's at a point in time. Over the course of the last year, we have owned MTN and Vodacom from time to time. Our feeling was that currently the market's pretty tough. I think you've always got to be very careful with Vodacom. There's a huge dividend coming out, so you don't want to be on the wrong side of it with that. And I think a lot of people play with the share around that time. But we actually didn't have a lot of the big counters in, the big stalwarts, the MTNs, SABs, Vodacoms for a lot of the last 12 months. And I think that's part of the reason why we got to the top. I think the things have run fairly hard.
Well, Shamil thinks of his comeback. David, you go.
You put me off there. To stay up top, you've got to be there for 3 to 5 years.
Yeah, sure.
Where do you, and that's not, you've done incredibly well.
But it is a short time period.
But you left out resources, which I think most other people didn't do. And,
sure.
Well done on that. Where do you see the next year, Pete? Where do you see your growth? How are you going to sustain that in a very difficult environment?
I think the thing that keeps us up at night is resources, because it's a big weighting in the index, and if you get it right, you can be at the top. If you get it wrong, you're at the bottom. So we probably, if anything, buying a little bit of resources into the weakness. I think in our game, a lot of it is a relative game as well. And there are some particular stocks that look like good value. But I think, my sense is for the next 12 months, it's actually more about what you don't do than what you do. You want to avoid the mistakes. Because when markets are high and valuations are rich, you can be in shares that can drop 30-40%. So I think you want to up your quality level, and we always have been in our investment style. The chief investment officer, in fact, the guy who runs the fund, Sean Ashton, we fixated with quality and valuation, and there's portions of the market now that, in absolute terms, are looking very, very high.
So, a selfish question: what's your top 5 picks?
Well, I think there you can see them in our equity fund. They've all run quite hard, so I guess one has to revisit it. But I think things like Naspers, Discovery, the healthcare sector is quite interesting, where the ones have run quite hard. Netcare we're kind of warming towards, because Mediclinic and Life have run quite hard and coming out with fairly mediocre results. I quite like, although it's not in our fund at the moment, but one that, again, you've got to look for the quality businesses that have lagged. So Old Mutual, I quite like. And then I think for the last 10 years, and any time anybody's given me new money, the first share I've bought is Aspen. It's quite hard to stomach at the moment because the valuation is particularly high. The forward multiple of Aspen is starting to rival the forward multiple of Tencent, which everybody screams and shouts about being incredibly expensive.
2 quick questions. The first one is going to be fairly unfair. You spoke about mistakes. Which are the biggest mistakes that you think the guys that are sitting at number 2 and below have made in the last 12 months in terms of stock selection? And the second question, not too unfair, but you spoke about Netcare in particular. Are you at all worried by this healthcare inquiry that the Competition Commission is launching, and whether this is going to have a bearing on some of the appetite for the healthcare sector overall?
Yeah, you know, these things drag on for years and years, and investors kind of almost become a bit blasé about them. So until there's something a bit more specific, and you know, the healthcare sector, effectively the buyer of healthcare services, are big businesses with a lot of buying power, and they know exactly what goes on in these hospital companies. So you know, we're not really too frightened about that. On your first unfair question, I think the lesson can be learnt if you actually look at the top 10 unit trusts in the last 12 months, and I think about 5 of them are index funds, which means the average South African fund manager hasn't done particularly well over the last 12 months. And that's for 2 reasons. One, the market ran up quite strongly, and inevitably when it's running up, there are times when you think you should go into a bit of cash. And if you went into 10% cash when the market's running, you get left behind a bit. We had a kind of a fairly aggressive view. And then I think a lot of luck involved. When the market got really high, we turned a bit more defensive. And a lot of it was whether you had the resources or not. You know, because in October particularly, well, certainly on a year-to-date basis, you know, resources are down 8 and financials are up over 12 or 13. So the relative is massive.
Where do you think...
Peter, just very quickly, we were particularly active in the fund during October. That's what you say here in your commentary. So in other words, around about October the 14th, 15th, when the market came down, you just loaded up. If it comes down again, have you got loads of cash to load up again?
Yeah, I mean, we were fairly fully invested, but I think what we actually did quite nicely was we did a lot of switches. We were quite heavy in AVR. We switched to Woolworths at the bottom of the market. We switched to a lot of Discovery at the bottom of the market. We bought some Mediclinic. We traded Naspers quite nicely. So yeah, I mean, with what's happened over the course of the last month or two, it's reminded people that markets can go down as well. So it's, you know, I think you've got to revisit the market every time every time things come up to decide whether things have changed materially.
Peter, thank you for making the time to join us. That's a big thank you to Peter Armitage. He is the CEO of Anchor Capital.